Beginner's Guide to Deep Learning in Stock Trading explains simply, deep learning is transforming how investors approach the stock market. What used to take teams of analysts days to figure out, AI can now do in minutes, and often with greater accuracy. In today's video, we're going to break down, in simple terms, how deep learning works in stock trading, why it's different from traditional investing strategies, and how beginners like you can start using it to make smarter financial decisions. If you've ever wondered how hedge funds or tech-driven traders seem to always be one step ahead of the market, the answer often lies in one phrase: deep learning. Deep learning is a subset of artificial intelligence that mimics the way the human brain processes information, but on a massive scale. It uses layers of neural networks that learn from data patterns and continuously improve their predictions. In the context of stock trading, deep learning systems are trained on years of market data. Everything from price movements and company earnings to news articles, interest rates, and even social media sentiment. These systems don't just analyze what happened yesterday. They learn why it happened and predict what's likely to happen next. Let's say you're looking at Tesla stock. A traditional trader might look at recent performance, quarterly results, and maybe a few analyst reports. A deep learning model, however, can process millions of data points, including how similar stocks behaved under similar conditions, how investor sentiment is shifting online, and how current interest rates correlate with tech stock volatility. It combines all of this to make predictions that no single human could ever calculate on their own. But here is the key. Deep learning doesn't replace human judgment. It enhances it. It's a tool that helps investors make data-driven decisions instead of emotional ones. Beginners often lose money because they react to fear, hype, or headlines. Deep learning algorithms don't do that. They rely purely on data patterns and probabilities, which makes them more consistent over time. Now, let us talk about how beginners can actually start applying deep learning in stock trading without needing a computer science degree. First, understand that you don't need to build your own AI system. There are platforms and tools already built with these algorithms that can help you. Apps like Trade Ideas, Caveout, and Zach's AI-driven recommendations use machine learning and deep learning to scan thousands of stocks and identify opportunities that fit your goals and risk level. Even platforms like Robinhood and eToro are starting to integrate AI insights to help users make more informed trades. The second step is learning to interpret AI-driven data. Deep learning systems might tell you which stocks have bullish momentum or where risk is increasing, but it's up to you to understand the context. For example, if an AI model predicts that a certain stock has a 70% chance of rising based on historical trends, that doesn't mean you should go all in. It means you should weigh that data alongside your own strategy, time horizon, and risk tolerance. AI provides the insight. You provide the decision. The third thing to remember is that deep learning thrives on data, and that means the more data it has, the smarter it gets. That's why major financial institutions and hedge funds invest heavily in these systems. But even as an individual investor, you can benefit from scaled-down versions. Some platforms let you test your own strategies with backtesting, meaning you can see how an AI model would have performed in past market conditions. This is an incredible way to learn without risking real money at first. There's also a misconception that AI always wins. Deep learning models can still make mistakes, especially when something unpredictable happens in the market, like a global event or sudden regulation changes. The point isn't perfection, it's probability. Over the long term, AI models can tilt the odds in your favor by reducing emotional bias and identifying trends early. Another major advantage of deep learning in stock trading is its ability to adapt. Traditional models use fixed rules. If this, then that. But deep learning systems learn and evolve automatically. They can adjust to new data, changing patterns, or market anomalies without manual reprogramming. This adaptability makes them especially powerful in today's fast-changing financial landscape, where yesterday's rules often don't apply anymore. If you're serious about improving your investing game, you should think of AI and deep learning as your research assistant, one that never sleeps, never gets emotional, and constantly learns from its mistakes. The future of investing belongs to those who can combine human creativity with machine intelligence. 2. Good news. You don't need millions of dollars or a PhD to start. You just need curiosity, consistency, and a willingness to learn. Now, before we wrap up, here's something to think about. A decade ago, only hedge funds and big banks had access to deep learning technology. Today, that same power is available to everyday investors through apps and online platforms. This is one of the biggest financial revolutions happening right now, and most people still don't realize how accessible it is. The earlier you start learning how it works, the more advantage you'll have in the coming years. So, if you want to stay ahead of the curve and master how deep learning is reshaping stock trading, make sure you hit that subscribe button right now. Like this video if you found it helpful, share it with someone who's curious about AI investing, and drop a comment below telling us what kind of AI investing tools you'd like us to cover next. We're rebuilding a community of smart investors who want to grow their wealth the intelligent way, and you belong here. Remember, knowledge compounds just like money does. The more you learn, the more you earn. Stay tuned, stay smart, and let AI work for you, not against you.